Hey, what's going on, team? It's Ricky with TechBot Solutions. I hope that you guys are all having an amazing Sunday. Thank you guys again for joining us, especially after the holidays. I hope that you guys had an amazing time with your family, with your loved ones. But most importantly, especially now after the holidays, who's ready to get back into the market? We actually have a couple new people that are joining us. If you're watching this for the first time, please, I want to encourage you to participate in the live chat. If you're watching this live, you can ask me any question that you want about getting started, about any stock that you see value in. This is the time to ask me, as I would love to, break down any stock for you. I really hope that you learned something new in this video. And if you like the way that I trade, if you like the way that I break things down, I would really encourage you to also consider subscribing, as I upload new beginner videos every single day. So I'm going to take a couple of minutes or a couple of seconds really just to say what's up to the couple people that we have tuning on in, and then we'll just get right to it. We're going to be breaking down the top 10 stocks that our group members see value in right now. So I hope that that's something that you can look forward to. So what's going on, Juan, Javier, Saddam, Jerome? What's going on, Oleg, Ama, Will K, Alethea? How you doing? What's going on, Julio? What's up? What's up, Acacia? Hope that your guys' holiday is going well. What's going on, Fabian? What's going on, guys? So we got Brian here, Sebastian. How was your guys' Christmas? Everything was good? All right, so we got Sam, Sebastian, Kirkits. What's the biggest mistake trading the stock market, and how did you learn from it? I think one of the biggest mistakes that and you can ask anyone, the biggest mistake that you'll experience, that you'll see a lot of beginners experiences, it's very easy to get started in the stock market, right? It's very accessible. And this happens with a lot of different markets, businesses, industries, where there's a very low barrier of entry, meaning that it doesn't cost very much to get started. And with that being said, because it's so accessible, people don't treat it as seriously as they should. And it makes sense, right? When something is too easy to have access to, sometimes people either just abuse it and or don't take discipline, initiative, which is why we always try to encourage, especially with our Learn Plan Profit group, and staying disciplined, staying structured, only trading with a plan, and making sure that you take risk management into consideration. If you're an absolute beginner, that probably doesn't make much sense to you. But if you're someone that is either intermediate and or has some experience, I'm sure that that's something that we can see eye to eye on, where it's so easy to get started in the stock market that people can just fund their trading account and begin to buy a stock in just the next couple of days, right? And because it's so easy, that low barrier of entry, it's kind of like a blessing and a curse. It's great for those that want to get started quickly, but it's a curse because it's so easy to get started that you don't treat it as or take it as seriously, which is very unfortunate. So what's going on? Is it Anthonios? What's going on? Inferno, Ben, what's up? What's up? Hope that you guys are doing well. Alrighty. Oh, it actually looks like, dang it, the video is unlisted. That was my bad. I was supposed to make it public. So I was wondering why it was there's so little people. Let's see if we can get a couple more people in here other than just the link. So ready for this new journey with the LPP team. Appreciate the shout out. Of course, happy to have you guys here. Also, while I have you guys here, a lot of you guys have been asking for our discount. So our biggest discount that we will ever offer is $150 off. I'm going to put it here in the live chat. If you're ready to join our team, the link is right there for you. That's to be able to watch me trade live every single day, to be able to have access to the complete beginner Learn Plan Profit 2.0 lesson library. And again, it's our biggest discount ever. And also, you're of course going to have questions as you're just getting started. So this is why the Learn Plan Profit group chat is where you have access to me 24/7. So what's going on, Kevin? So what's going on, Flameboy? What's up, Justin? All right, let's see if, I don't know if it actually went public yet with the link, but let's just go ahead and get started. So any stock that you guys would like me to break down, just to make sure you share it in the live chat and I can begin to break it down for you. One of the things that I quickly wanted to talk about is TQQQ. So I have a big focus on the NASDAQ market. One of the main reasons that I have a big focus on the NASDAQ market is because of how bullish it is. I have a lot of beginner traders, right, that are watching my videos, and I think it's easier to make money when the overall direction of a stock is indicating signs of growth. Instead of trying to trade or invest in a stock that's all over the place, in my life, at least simplicity is key, right? Consistency is so important. And if you look back, this is the overall lows of the pandemic. This was March of 2020, and it's been on a consistent uptrend ever since then. The market does pull back from time to time, which is when I love to buy. We recently pulled on back. And if you look back about a week from today, all I made videos about was buying the dip. I love investing in quality blue chip stocks when the market sells off. So when everyone is freaking out, when everyone is afraid as the market bleeds a little bit, that's when our Learn Plan Profit team takes initiative and we like to buy the dip, right? So when it recovers, just like it did last week, you can see that that's where we make the money, right? We make the money as it recovers while everyone is just hoping for the market to recover just so they can be back to that break even. It's understanding how the market works, that it's great to be invested in it, but it's great to also understand oversold levels, which means cheaper levels. So when the market recovers, you can make money on that recovery. Now, when we look at this on the 4-hour time frame, one of the things that I wanted to point out is TQQQ is a NASDAQ ETF. One of the things some of you guys actually, our Learn Plan Profit members, messaged me, and some of you guys said that when I write down in the notes section, that was somewhat useful for a couple of you. So I'm gonna try to continue to do that. So while I'm explaining things, I'm gonna be writing it down here in the notes section. So I hope that not only can you visually see me, but also taking a moment for you to be able to plan out your trade. So one of the things that we saw with TQQQ is a triple leverage ETF. It follows the NASDAQ market. So when the NASDAQ market moves 1%, this ETF moves 3%, both on the green and in the red. So take that into consideration. It also does decay over time, so that's something that you have to take into consideration. But the support and resistance, I would say support was right around 145. I'm sure we would agree on that, 145. One of the resistance levels that I want to talk about is this resistance level right around 170. So 145 is the support, and then we got 170 as the resistance. My entry point on TQQQ was right around, it was not a perfect entry, but it was right around 150. I bought at a very low price point, but I really began to step on the gas when it broke above 150, and then as it surpassed the EMA line at 153. Now, if I were to ask you a very simple question, looking at TQQQ, it's not that it has to do this, but looking at TQQQ at oversold levels and overbought levels, right? Overbought meaning not cheap. Oversold meaning cheap. Look at the MACD, look at the RSI. What would you guys say? So if I'm asking him, I'm trying to ask you guys a quick question. So if you're watching this and you want to participate, please just comment in the live chat. So if you would look at TQQQ, would you consider this to be a stock that is oversold or overbought? Is it cheap or is it expensive, right? So again, my overall entry on this one was right around that 150 price point. And then as it began to get closer to that 160 price point, as it was approaching this moving average, that is when I began to make the decision to begin to lock in some of my profits at these overbought levels. Although the previous resistance level was right around 170, which again, we could see that it would push to 170 and then get rejected, push to 170 and then get rejected, push to 170 and then get rejected. So our job as traders is to understand where it makes sense to buy and where it makes sense to sell based off of previous resistance levels. It's not that it has to get rejected. That's not what we're saying, but it's saying that as we get closer to that 170 price point based off of previous patterns, we run a higher risk, just like a lot of you guys might be saying. Overbought, expensive, overbought. And I don't know if you guys would agree, but I think it's a lot easier to kind of make sense of these trades when we talk it out, right? Would you guys agree? When you guys are with me during these live sessions, is it easier to kind of see eye to eye to understand, yes, this is an oversold level. Yes, this is an overbought level. And if you guys do the math, right? So I like to calculate percentage ROI, right? So we could see that from 140 or 145 to where we could potentially hit a resistance level right around 170, that would be about almost a 16%, almost 17% ROI. But even with where it's at right now, that's about a 13% ROI. Again, I decided to lock in profits on TQQQ. Just because I sell does not mean that you have to as well. But I tend to always sell a little early, right? If you're part of the Learn Plan Profit group and you get to watch me trade live every morning, you see it time and time again. I'm a little bit more, sorry about that. Sorry, headphone users. I'm a little bit more conservative when it comes down to locking in profits. And I like to stay in the green, right? I don't like to be greedy. How many times have you guys ever purchased a stock? It hits a resistance level. You just want to make a couple more bucks and then it goes right back down. I don't want to get caught in that emotional roller coaster of holding again as it pulls back. I understand oversold levels. I understand overbought levels. I'll just wait for the next time it dips and then I'll buy back in again and I'll ride back for the recovery. I like to keep it that simple. So Ricky, will you buy TQQQ? So I really like these questions. So I appreciate you asking, Flameboy. You guys have the funniest usernames. Will you buy TQQQ if it pushes past 170? I would potentially go into it, right? So this is a really good question because it kind of gets into like day trading and swing trading. And when we surpass a resistance level, I might go into it, day by day trading it, right? Meaning that I buy and sell within the same date. But based off of previous patterns, if it continues to go up, I can continue to day trade it, but it wouldn't make much sense, in my opinion, to hold something at overbought levels when it runs the risk of potentially pulling on back. Now, one thing that we also have to take into consideration is that TQQQ is so bullish, so it's not super risky. If I choose to swing trade it, if it breaks above 170, I just don't like to swing trade or really hold a larger position size, right? So I don't like to hold a lot of money as it surpasses and becomes overbought. Even though it might be bullish, I might have some skin in the game, but position size, and I'm sure a lot of you guys can agree, is so important because guess what, right? If I'm fully invested up here and it's pushing up, and then all of a sudden, right? Let's say there's a news article that's shared that Omicron, right, unfortunately, encourages borders of the US to close. Businesses are back in lockdown, cities are back in lockdown. That would cause the market to drop. And if I'm fully invested at overbought levels, now I have to wait. I have no more money left, and I have to wait for the market now to fully recover after that drop. If I focus on having a smaller position up here at overbought levels, I at least can tolerate that pullback and still have money left over to buy the dip if things go, worst case scenario. And that's one of the things that I always like to remind all of you guys, especially if you're an absolute beginner. And trust me, you can quote me on this, and if you can share your experience also, and I hope that other people that are just getting started can read other people's experience. But I can almost promise you that you, by focusing so much less on trying to maximize your profit on every single trade, and if you focus so much more on position size and locking in profits and managing risk, I think you will be much better off scaling and learning than many others. It's a very common mistake where you obsess about position size, where you obsess about being fully invested all the time, that more often than not, it ends up putting you in a very unfortunate situation, because what follows with having a lot of money invested in a trade? It tends to follow with a lot of risk, right? Or a lot of emotion. And when things go south, you become an emotional mess. You kind of hesitate, right? So if you're someone that's just getting started, a question we always get is, how much money do you need? How much, do I need $10,000 to get started? No. I mean, we have people that are starting with their paper trading accounts. We have people that are starting with less than $1,000. You need to understand that even if you just buy one share of a stock, as you're getting started, you should focus on the learning part. The making money comes later. Reminder, because the stock market is so accessible and that low barrier of entry, meaning that it doesn't cost much to get started, you need to treat it as serious as possible so you don't make the mistakes like everyone else, right? So let's go ahead and break down to the next one. I would also be careful with SQQQ. Market is bullish right now. So going into SQQQ early probably is not the best idea. So Corey, I appreciate you posting Mara in the ticker call out format. Let's go ahead and break this down. So I'm going to go ahead and copy this ticker call out format just so I can copy and paste it on this one. Let me see. Here we go. Alrighty. Get away with that. So one of the things that I'm noticing right now with Mara is the reason that you're probably paying attention to this is because Mara right now is very oversold. Mara, again, this is just my opinion, and if you don't like it, then I respect your opinion as well. I think Mara is somewhat like of a very hyped up, if I'm not mistaken, it's just a very hyped up stock. When it gets going, it's very, very bullish. It becomes very overbought, but you have to understand when a stock moves like this, when it pushes up to highs of $57 and then it crashes, I said that, right? It crashes to lows of $20. Think about that, $60 to $20, that's losing more than half of your account. Think about that, because most people are buying up here and they bag hold all the way down here. So again, when a stock pushes up this high and then crashes from highs of 83, now it's trading at 38, that's over a 50% loss. So understand that with a high risk, high reward type of stock, it is so important to take risk management and position size into consideration. Now, yes, you could make a lot of money on something like Mara. If Mara pushes up and it goes to previous highs, which it has done this before, that's 120% return. This is going to be a very high risk, high reward type of play. But one of the things that I always like to remind our beginner traders is that only trade these when the direction is in your favor. When something is consistently selling off, you buying in early does you nothing. If anything, think about it. Think about what you're actually doing. You're putting money in something that's consistently losing you money. And although it might be showing signs of an uptrend, watch that position size. As you average up into a position, you always want to feel in control. Right now it's good because it's above EMA. But if all of a sudden, if Mara comes down to lows of $33, how are you going to feel then? And I did say that. How are you going to feel at $33 when you invested at $38? So it's not just about thinking about what if it makes a full recovery. I need you to always take into consideration the worst case scenario. If you only look at one side of how much money you can make, you're really setting yourself up for failure if you think about it, because you're not preparing for how things can actually play out. And there's always, literally always, two sides to every opportunity. So the way that I would draw this is the support here would be right around $31. The resistance level I would first see to be right around the moving average, which is right around $50 a share, right? So now we're trading below the moving average. So a heads up for that, $50 a share, and then it's going to be 85. So I'm going to just put 80 to be a little bit more on the conservative part. If you were to want to, be invested in something like this, I see why you're paying attention to it. MACD, RSI, all of that looks good. It looks like we're now finally trading above the moving average, but it's only been one day, right? Why get ahead of yourself? If this thing's been selling off for a month, what does one day really mean, right? Just look at the last time it did it. It pushed up and then sold off the days that follow. Don't just be sold on something right when it begins to show signs of a recovery, when its history has been nothing but selling off. Do you get what I mean? Allow an opportunity to prove itself to you. Don't chase opportunity. Make sure it meets your criteria. View it as a business transaction, as calculated risk. You're about to invest money into something, even if it's just the day trade. Is the direction in your favor? Is the upside, does it outweigh your downside, right? You need to be asking yourselves these difficult questions rather than just buying a stock because you can, right? So I could see why you would consider, slowly averaging up into this position. My only concern is that we're still trading below the moving average. So that moving average is going to be a big point for me, and I wouldn't even get invested in this. Again, I'm treating this as a much more conservative route. I wouldn't really even want to swing trade. If you want to day trade something like this, all power to you. This is more for swing trading, right? Or at least this planning is. So I wouldn't really touch this as a swing trade until it breaks above $51, and then as it gets closer to $80, I really wouldn't hesitate to lock in profits. And then ROI potential from low to high is 120%, right? So I know that could be very, very attractive for some people, but you also have to understand you need to learn how to walk before you run. So please take that into consideration as you're just getting started. Don't just chase the high risk, high reward type of stocks. It's also good to have those consistent stocks that are indicating signs of growth. So let's go ahead and break this down. So this is for Ibrahim. Is that Ibrahim? No. So NFLX. So this is Netflix, right? Let's go ahead and break this down. I appreciate you guys being so patient with me. I know that I'm taking a little bit longer to breaking these down. I just want to make sure that I write this out correctly when it comes down to support and resistance. So, alrighty. Netflix has been showing signs of an uptrend, as we can see right on over here, right? We can see that it was trading below the EMA line on the 4-hour time frame. It broke above the EMA, began to indicate signs of an uptrend. Look at the MACD. The MACD is already beginning to kind of peak, right? It's beginning to descend when it comes down to that MACD indicator. And the RSI is a little bit more on the overbought side. Take this into consideration. Netflix was bullish when it was trading above the moving average, when it was making higher highs and higher lows, when the direction was in your favor. Now, Netflix isn't, right? It's trading below the moving average, right? If you're part of the Learn Plan Profit group, within the Learn Plan Profit 2.0 course, one of the things that we talk about is market direction and how to add an arrow at the end of the moving average indicator and ask yourself, which direction is it pointing? Well, when it was trading above, right? So when the pattern was trading above the moving average, which is this light green line, Netflix was pointing up if you were to put an arrow here. But then the pattern began to trade below, as it's doing right now. Now, if I put an arrow with where it's at right now, it's descending, it's pointing down. So again, instead of making higher highs, if anything, Netflix is making lower highs and lower lows, meaning that it's potentially at a resistance level and about to potentially pull on back. Looking at the MACD, looking at the RSI, looking at current market direction, it really wouldn't surprise me if Netflix begins to break below the EMA line on the 4-hour time frame and continue to drop. So please take that into consideration as you're choosing to either swing trade or day trade something like this. Don't just look at the intraday play and then make a swing trade out of it, but look at the overall direction of Netflix and ask yourself, is it actually showing signs of a continuous uptrend? If you want to buy in early, I can't control what it is that you choose to do. I'm not here to tell you where to buy, where to sell. All I want to encourage you to do is to look out for your future self and make sound trade decisions based off of not hope, but what actually the charts are telling you, right? And I think it's very easy to see this descending resistance and descending support as well. So I'm not even going to break this down because I would need, I guess I can break it down. Support on this one would be right around $600 a share. Resistance on this one would be right around $700 a share. We got desired entry point. This would be right around 640, which is where the moving average is. And then the sell would be right around 680. So at that point, it's not even any crazy ROI potential. But if it does play out perfectly from where we're at right now to a full recovery, that's about a 13%. And again, 13%. There's a lot of bullish stocks right now that are indicating signs of growth that can offer you 13%, right? That aren't actually continuously selling off. So just make sure you take that into consideration, that you have a lot of options. So Ricky, I made 5.5K last week. I used some of your knowledge to help buy and hold. Thanks. That's all you. Super happy to hear that you're doing well, man. Let's go ahead and I like this. So Crocs and PLUG. Let's break those down. So let's go through these maybe a little bit quicker. So PLUG. Alrighty. Here we go. So PLUG, so if I were to ask you, for all those that are watching this video right now, is Crocs or PLUG. So is it bullish right now or is it bearish? Is it selling off or is it indicating signs of growth? What would you guys say? What would you say right now for PLUG? Is it selling off or is it indicating signs of growth, right? So if you wanted to make money right now, would you put your money in PLUG because it's showing signs of an uptrend? Is that what's happening? So I'm asking you, right? Is that what's happening? I would say support level right now would be right around $30 a share. Resistance level would be right around $45. Desired entry point, a conservative one would be right around 37, right? And or when it begins to trade above the EMA, if you want to be a little bit more on the risky side, just watch your position size. So that would be right around $30 a share. And then the exit would be closer to 45 once again. Let's do closer to 40, as that would be a more conservative. That's really where we saw a lot of this consolidation. So from where we're at right now, let's do 30 to around $40 a share. That's about a 40% ROI. So not even with a perfect trade, but with where we're at right now, 40%. So yeah, bearish, no, downtrend, selling off. Yep, downtrend. So already put my money. Yeah. Well, again, there's nothing wrong with buying the dip on a stock. If you view PLUG to be like a very, very cheap stock, and it's like, you should never be told what to do. And I'm a big believer in this. I don't care if I feel like if I would put myself in a shoes of an absolute beginner, I would like to understand how other people see value. I'm all about sharing opinions, sharing thought process on, how we identify value and how we tolerate risk. But you should never be told where to buy and where to sell, right? So if you actually see value in PLUG at this price because you think that you can sell it for a profit, so be it. All I'm here to remind you, right, with these free videos on YouTube is that I like to look out for you. I like to look out for beginner traders. I like to make you aware of not just all the great stuff. Like, yeah, trust me. Just imagine if all my videos were, if all I ever talked about was how much money you can make, right? I feel like a couple videos ago during my Sunday stock talk, they're like, Ricky, you always talk so bad about every stock. You always point out what's not so great about every stock. Well, just imagine, right? Just imagine if I talked what's great about every stock and only focused on that, right? You would be sold on the idea that you should invest in every stock. And that's at least not what I'm here to do. I like to encourage you. I like to encourage you for whenever it is that you ask me a question. If you ask me on Instagram, if you ask me within my YouTube videos, if you're part of my Learn Plan Profit group and I'm breaking down a stock for you during our live trading sessions, I like to share with you not just the good, but I like to share with you the bad, because I need you to make an informed decision, to take both the good and the bad of what I'm aware of, and then at least you can make a little bit more of an informed decision based off of that. It's not that what I'm saying has to happen. Never, right? That's definitely not the case. But I think it kind of brings you back to earth in the sense that you're not just going to be super hopeful and thinking that the stock has to make a full recovery right away. But like I just said, Plug has been selling off. Just like all of you guys said, it's been on a downtrend. It's been, decreasing in value, but it is at a good price. So I like to make you aware of its current direction. And then I also like to make you aware of your position size. If you decide to buy in early, watch that position size, keep it light just in case things go south. You can tolerate it, you can manage it. And if things begin to go well for you, then guess what? You can always step on the gas and average up into it, which I think is one of the amazing things about the stock market. If you actually think about it, is you are the driver behind where you choose to put your money with these different trades. So just make sure that you make informed decisions and that they're not just based off of hype or what someone else is telling you what you should or should not do. I'm a big believer that you should never be told what to do. So I hope that you guys can at least appreciate that. Anytime that you guys ask me a question, I really try to, to the best of my ability, look out for you. So I hope that I can, earn your thumbs up with that. Crocs is a stock that I did break down. I already have my breakdown right here. It is very oversold, but the cheap can get cheaper. So Crocs, I don't know if you guys even knew this, ever since the lows of the pandemic, it hit lows of $8.40. Just imagine this, right? I bet you, right? If just a couple days ago someone asked you, what is a stock that is publicly traded in the stock market that experienced over 2,000% return in the past 2 years, in less than 2 years? I bet you would have not said Crocs. Who would have thought that those shoes with all the holes, right? Those slippers, you can put them on sport mode, right? Or 4x4, what do people say? That it made over 2,000% ROI in just what? A year and a half, almost 2 years, right? Now it recently pulled on back. It's correcting itself, right? It's kind of bringing itself back to earth. It's very oversold, which is why now my Learn Plan Profit team and people like myself that like to focus on oversold and cheap stocks that were doing well, we like to pay attention to this. And it's not that we have to buy the stock right now. That's definitely wouldn't be a smart decision if it's still going to sell off. But this is when we begin to pay attention. We like to pay attention when other people are in fear. When other people are selling because it's crashing, that's when our team likes to pay attention. And we like to ask that question. Hey, when would it make sense to buy something like this? I would say that maybe when it actually begins to obviously indicate signs of an uptrend, maybe trading above 130, actually showing signs of a recovery, you might ask, well, what would that look like? Well, just like what it did last time. When it hit highs of 163, it pulled back to lows of 125. It found its support. It reversed back up, broke above the EMA line, which is right around 140, and then made a full, if not greater, recovery. So again, we pulled on back. We're oversold. Now we wait for Crocs to prove itself to us. And I did say that. I will wait for Crocs to prove itself to me for it to be worth or considered a value, investment. So also, this is a perfect time. I'm really happy that this happened. You guys will see that anytime on Instagram, anytime on YouTube. Just know that I do not have WhatsApp. There's a bunch of fake Instagram accounts, YouTube accounts that will say, appreciate your comments, send me a direct message on WhatsApp or money management. I do not do any money management. I try to block these accounts all the time. Please, anytime that you see it, screenshot it, report it, and send it to me. I have one Instagram account and it's linked in the description. I never ask for money. I never manage other people's money, and I will never ask you to transfer money elsewhere. I never message you first. Let that be. Anytime that you receive a message from me and you didn't initiate it, it is not for me. Look at the account. It's fake. Verify it, right? Message me on my Instagram. Right now I have 190,000 followers. Please always report those accounts. You can even mess with them, waste their time, make sure that you laugh at them, right? But never send them any money. I don't do any of that stuff. So please always report those different accounts. So, all right, let's go ahead and break down. So we got Disney right on over here. And then I think we have AMC. So let's go ahead and break that down. So Disney is one that I have been paying attention to. So Disney is a little bit more on the oversold side on that 1 year chart. When looking at it on the 4 hour time frame, you guys can see that it's been on consistent descending pattern. All I have to say is when a stock has been selling off for this long, it has a lot to prove, right? It needs to prove itself, to me at least, that it could recover, that it could show signs of growth. All for the past year, really. Disney has been selling off, right? From $203, now it's trading at $153. I don't want to put my money in something that's consistently selling off. I don't want to waste my time. Do you want to waste your time? Right now, I would say that I would like to be very selective. It's at a resistance level. It's been getting rejected by this moving average. I wouldn't touch it. I think it's more overbought than it is oversold. Set those alerts on when you think it would make sense to maybe reconsider Disney. I would like to follow up with it later on, but as of right now, it just wouldn't make sense to me because the direction is not in my favor. It looks overbought. It continues to get rejected by this moving average. It's a descending pattern, and it's been selling off more recently than it has been going up. So 1 or 2, 3 days of a green, day doesn't mean much to me when it's had weeks of just continuous red days. Do you guys get what I mean? So Alrighty. Alrighty, so AMC, and then we got CCL. Let's go ahead and break those down. So AMC is a very, very popular stock, obviously. A lot of you guys might know that I do trade it from time to time. It's one that, you know, I would consider a little bit of a higher risk, higher reward. I like to trade it when it's indicating signs of growth. Right now, that it's kind of at a resistance level, showing signs of it pulling back. Let me ask you a simple question. Would it make sense to put your money in something that's showing signs that it's about to fall and lose value? No, right? Well, AMC, if you look at this, the way that I'm viewing it is that it did indicate signs of an uptrend. Moving average is descending. It's pointing down, right? If I were to put an arrow here, it's pointing down. It pushed up, it's consolidating. And just like it did last time, it consolidated here and then it dropped, right? It sold off, found a support, pushed up, hit a resistance, sold off. Found its support, pushed up, hit a resistance, now it's selling off. It's almost making these lower highs and lower lows. As of right now, I would be very careful. Again, set those alerts. Maybe if AMC begins to trade above $29.50, $30, if it begins to indicate signs of growth, then yes, I can day trade it, I can swing trade it. When the direction is in your favor, when it's actually increasing in value, of course it makes sense that you want to partake in that action. But why would you want to buy it when it's still selling off? It's not indicating any signs of growth. It's testing right now. Direction's unclear. So because of that, I wouldn't waste your time, right? The whole point that you're watching these videos, the whole point that you're here is to be better, to be efficient, to not be like the other people that just waste their time watching a stock consolidate. Who wants to do that? Not me, right? I don't know if you guys do, but that's not what I want to do with my time. Carnival Cruise Line made a huge recovery from its overall downfall. If I were to ask you, based off of how Carnival Cruise Line is trading, right? It pushes up, becomes overbought, it sells off. It pushes up, becomes overbought, it sells off. It's much easier when I explain it like this, right? It pushes up, it becomes overbought. Look at the MACD, look at the RSI, right? Guess what tends to happen? Not always, but guess what tends to happen? After it pushes up and consolidates, it's almost, again, it's not like I can predict the future. It's not about that. It happens almost every single time. It pushes up, becomes overbought, pulls on back, pushes up, pulls on back, pushes up, pulls on back. So as of right now, I view Carnival Cruise Line to be a little bit more on the overbought side. I don't view it to be a good deal. I see more downside potential than upside, and because of that, I personally wouldn't touch it right now, right? If it begins to pull on back and then it tests its support level and then begins to indicate signs of recovery, that would be more attractive to me than where it's at right now. Set those alerts and let's follow up with it. So I'm completely new to stocks. I just want to put my money somewhere for a year while I can learn how to invest. What do you recommend? Vu. Philip, one of the things that I would encourage you to do before you invest any money is understand what it means to invest. Understand what it means to invest in quality stocks that can make you money. Why put your money in something that you have no understanding if it's going to continue to grow in value? Stop trying to, and again, I'm not trying to tell you what to do, but if I were in your shoes, I would stop trying to make money right away. And I would ask yourself a simple question. Do you understand why and how you would make money by just investing, in any stock, right? You need to understand the why behind everything. It's not about being told what to do, but understanding when to do it. That would be my goal for you. If I was someone that was just getting started, I would really focus on the learning part and understanding what stocks show signs of consistent growth, so then you can take that money that you worked so hard for and invest it when it makes sense, not just throw it at a stock and expect it to grow, right? What's that plant that they used to sell on like commercials that you just water it and it grows into like these like animals or cartoons? Oh, it's called chia, right? It's not like that, right? At least for most of the stocks that a lot of people choose to trade or invest, it's not always that easy. I would rather you take time and really, dive in and take time to understand and learn what it is that you're doing before you do it. Yeah, chia pets, that's hilarious. So what do you think about my A-firm calls for now to the end of January? First off, Yasul, I do not trade options, right? So if you have a call, you're expecting it to go up. If you have by the end of January, I don't know where your call, where you bought it at, or where it tends to expire, but I would say it's a little bit more on the oversold side. Do I think that by January, by the end of January, it can begin to make a recovery? Yeah, I mean, it has pulled back enough, right? From where it came from lows of 50, it hit highs of 176. But right now, and again, this is just my opinion, right now it's not showing signs of growth. So I would say your decision to buy in early and buy that call option is risky, right? So it's probably why it's a high risk, high reward type of approach. There's a consistent descending pattern. We are seeing signs of a potential support right here, right around that $100 price point. So yeah, I could see why we could establish a support here and then begin to make a recovery. But guess what? I can't predict the future. And all I can see right now is a descending pattern. So with that being said, until proven otherwise, you see my alerts here. I like to wait for confirmation. I like to encourage our beginners to be more conservative and wait for confirmation, as I feel like at that point, when it's actually indicating signs of growth, right? So if it was selling off and then it begins to recover and make higher highs, I would be more confident on that recovery. Right now, it's difficult to say. The only reason that I think it can is because, it's so oversold that it could potentially have a nice little run before then, but that's up to you. Alrighty. So bought into Lucid at 40, roadway till 60, held and considered. That's all. Yep. So I'm not a big fan. Nathan, that's a really good question. I'm sure you already know, right? If you're asking me that question, if you've been part of my YouTube channel, I do not like hyped up Tesla copycats. I know, and there's NIO, it was Nikola Motors, NIO, and then now Lucid, right? These companies do very good job marketing, right? There's also Rivian stock. It's that recent IPO. And I see this time after time, right? You can say whatever it is that you want. All I ever see is look at the volume. They do a very good job marketing themselves. The comparisons to Tesla, the competition, the expected pre-orders. But then once that hype dies out, and it hits that overall high, they correct themselves and they bleed hard. This is why I say trading EV competitors is very, very risky. You can make a ton of money, right? When it recovers and when it's bullish and when it's showing signs of growth, right? Like I said, I like to trade and day trade when the direction's in my favor. I do not like to trade when the direction is not in my favor, when it's bearish, when it's selling off. Right now, it would make more sense to short Lucid than it would to go long on it. Why? Because it's been selling off ever since the beginning of December, right? It reached its peak and it began to sell off. Now we're at a potential support level where it could begin to formulate a reversal, but we have no confirmation yet. I have my alert set. I would like to follow up with it, but as of right now, we have no confirmation. So we have to be very careful with that. I wish you nothing but the best. But again, understand why direction is so important, right? There's this saying of the trend is your friend. When things are bullish, great, but understand when enough is enough and when you need to pull out to, play it safe. So 1, 2, 3, 4, 5, 6, 7, 8, 9. Let's go ahead and do 2 more and then we can call it a live stream. So, hey, Ricky, I sent you a message on Instagram. Usually, how long does it take? Francisco, if I don't respond within 24 hours, sometimes I do overlook some messages. Just send me a period or like a bump, and then it'll bring it back up to the top of my list. I appreciate you asking. So let's go ahead and see what we have here. All right. How am I doing so far within this live stream? Are you guys enjoying it? I feel like we're going a little bit more in depth, right? I hope that this live stream is useful for some of you beginner traders, especially if this is your first up and coming week. And I hope that you can really consider subscribing to the YouTube channel and dropping a thumbs up. Alrighty, let's see what we have. So we got Facebook, CELH. All right, let's do some of those. Facebook is going to be very quick, so that one's not going to be very difficult. Facebook is a stock that I'm invested in. I'm not here to encourage you to jump into something just because I'm in it. I like Facebook. If you're trying to make money right now, I don't think Facebook is your stock, and I'm very okay with saying that. I think Facebook is a stock that's kind of consolidating right now. It recently was trading at highs of nearly 400. It's sold off. It's consolidating. I'm seeing the potential for it to recover, but this is going to take weeks and months. So my intention is to make money over a period of time. So I'm trying to look out for you. If you don't want to waste your time, if you're trying to make money right now, Facebook is probably not it. It continues to get rejected below 350, and then it drops to lows of $300. A lot of you guys saw, especially if you're part of Learn Plan Profit, I bought Facebook when it hit lows of 300. I added more when it began to recover, and I'm okay with where it's at right now. If it continues to recover, then guess what? I'm going to buy even more. But it's not something that I expect to recover anytime soon. That's the biggest difference. Understand intention. If you intend to make money right now, then ask yourself, is this stock increasing in value right now? And if it's not, then you have a disconnect there. There's a discrepancy. But if you do, and you begin to see that, what you're looking at and what you're, trying to do, actually works, then great. At least it's a step in the right direction. So let's go ahead and see what we have here. So we got Roku. All right, Roku, and I want to see if someone has it in the ticker call out format. So Ricky, I don't have any money. Can you help me and give me? We're not here to give money away, no, right? If you don't have any money to even trade, you can paper trade. We have a lot of people that watch our videos and watch others and paper trade. It's a free way to trade. I wouldn't say not having money is an excuse, and if anything, especially if you're part of my trading group, I always try to encourage others to have a stable income of some sort, especially as you're just getting started, right? So, alrighty, Roku as of right now, bearish, making lower highs and lower lows, although Roku is beginning to look a little bit better after it hit lows of 190. I wouldn't say that right now would be the best time. We're approaching this moving average. I have all my alerts set right here. If it begins to indicate signs of a recovery and actually begins to, break above the moving average, then great. But as you guys can see, Roku has been selling off ever since its highs of 490. And right now it's testing the EMA line. You don't need to get in early. If it gets rejected and then it drops right back down to $200, how would you feel, right? It's trading below the EMA line. Set the alert for 240 and then follow up with it. If it begins to indicate signs of a recovery on the day chart, then you can slowly average up into it when it makes sense, not because you think that you have to or because you're going to miss out on something. Always understand that you have time. I would rather, again, this is my opinion, I would rather be someone that misses out on an opportunity instead of being someone that jumps into something and then ends up regretting it later. Understand calculated risk. It is so, so important, especially when beginning to learning how to day trade. So, yeah. All right. So CELH, yeah. CELH. All right, this is going to be one of the last ones that we break down, and I like this one. So this one is actually in my oversold watch list. CELH is one that has been recently selling off. It's been establishing its support level, so that means no longer selling off, and it's trying to indicate signs of a recovery. On the day chart, we can see it maybe a little bit more clear. It was very bullish, meaning it indicated signs of growth ever since the beginning of this year, right? Even last year, huge recovery. It hit highs of 110, it pulled on back, establishing its support. Now it's trying to make a recovery. Ask yourself that question. Is the direction in my favor? We're still trading below the moving average right now. I have my alerts set. If it begins to trade above, I can slowly average up into my position and make money as it recovers. If it gets rejected and it sells off, then guess what? I didn't jump in early, so I don't miss out on anything. It is so important to understand that you have time when you're learning how to trade, both day trading and swing trading. Understand that your job as you're just getting started is to learn. The making money part comes later. Stop obsessing and trying to make the most money right now when you're not even trading with very much money, right? It's almost like a rhetorical question. It answers itself. Why are you trying to make the most money right now and make all these mistakes that end up discouraging you, and you're not even really giving yourself, your future self, a chance, because you're making all these mistakes by obsessing about money when you're trading with such a small account. Why not focus on what's important? Why not focus about how to actually understand what trades are worth trading and what trades are not, so you can utilize that understanding, that concept, that fundamental understanding of what stocks are worth trading and what stocks are not. So when you trade with much more money down the road, you don't make those mistakes that end up losing you thousands of dollars. That's what it's all about. Having the vision that you're taking steps now to benefit your future self, right? So I would say support level is right around $60 a share. Resistance level is right around $110 a share. I wouldn't really like to enter this until it breaks above $80 a share. So again, it's going to be right on over here, $80 a share. So that's a little bit more on the conservative side. And I would like to lock in profits as it breaks above $100 a share. So that should be about a 20% ROI, a little bit over 20% if I'm not mistaken. So waiting for the break above the moving average, right around $80 a share. That's going to be right around 26%. But from where we're at right now, if this thing were to make a full recovery, this would offer about a 48% return. But I'm okay. I like to keep it a little bit more real. 20% instead of the 48% makes a little bit more sense to me. So, yep. I mean, that's really just it. So we broke down a little bit more than just 10 stocks. I really hope that you guys enjoyed this quick little live stream. Friendly reminder, and this will be my last time that I post about it, but you guys saw exactly how it is that I break things down. If you guys have ever seen me trade live, right? You've heard me talk about them before. It's the Learn Plan Profit group. I work with them on an everyday basis. If your goal is to copy other people, do not join. If your goal is to sit back and expect money to just start printing in front of you, do not join. If you're someone that's willing to work towards something, either both with day trading and or swing trading, you can be a student, you can be someone with a full-time job, you can be someone that just wants to do this full-time. There's so many different ways on how to make money in the stock market. I want to make sure that you understand that it's going to take time to first learn how to even get to the point to then start making money. We have our biggest sell ever. I have it pinned in the live chat, and or it's the first link in the description. If you don't see it, you guys can refresh your page. The first link in the description, it's $150 off, and that is for our Learn Plan Profit group. It is the biggest sale and biggest discount that I will ever offer. So if you're ready to join our team, we have that discount for you, and we can kick off the year, on a positive note. Other than that, please consider subscribing to the channel. I upload new videos every single day. And if you have any questions whatsoever about getting started, about joining our Learn Plan Profit 2.0 team, refresh your link. My Instagram should be in the description. Feel free to message me. And again, the Learn Plan Profit group is the only group that I work with. I offer no other service. I don't offer or work with any other team or any other people. If you're wanting to learn how to trade, this is literally the only thing that I offer. It's lifetime access, A to Z video lesson library. That's all new and updated just a couple, months ago. And then you get to watch me trade live every single day. I don't do yearly payments. I don't do monthly payments. It's nothing like that. It's a one-time payment, lifetime access to all the updates. I appreciate you guys' time. Hope and wish you guys an amazing rest of your Sunday. And for those that are part of Learn Plan Profit 2.0, set your alarms for market open, and I'll see you tomorrow at market open for our live trading session. Until then, like always, let's make sure that we end the